think we're working now. Are
That's
we?
nice. That's positive.
Yeah, no. All right.
Oh,
Either way, thanks for sticking around. Um, so, all right, everybody, welcome. This is going to be our first daily show. Actually, we've not really done one of these before. We did a trial run before. It was pretty long, I think.
yeah, hour and a half.
Yeah, that went pretty well.
Yeah.
But now at least we've kind of figured that we're going to go over some specific things every day and make it a bit shorter and all that. And then we'll have the long form stuff on the weekends on Saturdays. So first of all, Rob,
Yes.
how are you doing today?
I'm all right.
Just all right?
I've had a well, yeah, all right. I woke up in the morning, I came to work, I've come home,
Yeah,
and now the
you
highlight of
survived.
my evening, sitting and talking to you about
Yay!
charts.
Oh yay!
What's better?
Charts. It's not like we look at charts every hour. Let's be honest.
Exactly. Exactly. It's a highlight.
Precisely. So I actually wanted to start off by looking at the Bitcoin chart, and I want to kind of give you my thesis on kind of a longer term thing, and then we can zoom in a little bit and see what we think is happening right now. Because I think we both want to put some emphasis on the fact that you don't want to zoom in too much, right? You want to make sure that you're zoomed out, especially during a bear market like this one. So,
especially just when you start to look at a chart, I think that too often people will gauge what's happening based on what's happening now, and that's the only thing that they looked at, and that can give you a very looking at the chart over the last week and a half gives you a very, very different impression than the last 12 months.
yeah.
And so, yeah, always start the long term.
Yeah, precisely. So, and if we look at this from our perspective, which is we're both pretty much macro investors, macro type people, so it just makes sense to us. And we like to talk about the things that we at least feel like we know something about. So, not that I think we don't know anything about the 1 minute chart, but let's face it.
It's all the same chart. It's behind me, by the way. Is that's the 1 second chart at the moment.
I was just about to mention the 1 second chart. It's like it is a scary beast. But okay,
Yeah, it's great fun.
It is actually fun. I'm gonna switch over to the Bitcoin chart on the weekly in the browser. I'm gonna keep my face here. So my thesis here is, like I said, I'm looking at the longer term, right? And the first trend line I want to look at, Rob, I think you can see it too, is this one right here. And this is the long macro line. And I'm using the log chart because for me, looking back, on the long-term stuff, using the log chart is basically a must because it's so much more clear. I mean, you see everything so much clearer, right?
For especially for a long-term chart, for a long-term exponential asset, something that does have crazy moves up and down, then the linear chart. If you just switch to the linear chart from here, it's kind of useless because it just looks like it goes straight up and straight back down.
Yeah, it looks strange. Whoa. Wow. Yes.
Yeah. Remember when that price to the left was really, really high?
Yes. But either way, so what I wanted to do here is I kind of wanted to show my perspective on this one. And it's pretty simple. We're anchoring this from the top all the way down to Monday, March 28th of 2022. And that's where it's anchored. And since then, we haven't even come close to this line. And in my opinion, I feel like we need to break through this line before we can even start thinking about having some kind of confirmation that we're moving forward. And that doesn't mean that we're going to keep going down until we reach this, because if we do, we're never gonna crack through it, right? My perspective here is more like a sideways move between, because see the Fibonacci levels here, right? Between the 0.38 and 0.618. That's my range right here.
Well,
that's the range that I feel.
Given how well respected the 0.5 was,
Yeah.
You'd hope that you'd well, having broke through it the way that we did, it's
Yeah.
now very clearly well defined range.
Yeah. And I mean, if we look at from here, from when he cracked through the range, I mean, it's 420 days, right? It's over a year of sideways before I feel like, I mean, if we continue in this range here, it's going to take a long time before we even get close to this.
Oh, if we if we lasted all the way out to the middle of next year, then that's
Oh yeah, I mean,
it's very typical compared to 2014. This just looks very much like 2014-15, where
yeah,
we had just that year of just relentless downtrend,
yeah,
and then a straight up accumulation.
yeah, for sure.
2018 by comparison was incredibly messy, and we're just not seeing that same behavior. This is far more brutal and relentless in terms of the single direction it's going in.
Oh yeah, and I mean, let's be honest. We all realize that we're in a let's call it a. We haven't really. No one has really said out loud. No official person has said that we're officially in a recession yet. But I think we can all feel that
I'd say
it's
what
coming,
we're
right?
in, regardless, we're in the single biggest wealth destruction event in our history. That's what we're in.
Yeah, for sure.
In terms of the amount, the sheer amount of money that's disappeared from the planet,
Yeah,
is
yeah.
like
It's wealth destruction. It's what's
yeah.
happening, and to be honest, I am surprised that I'm not surprised, but I am happy to see that Bitcoin is actually only down 75%. And I say only because there are stocks that are down worse. I think Meta went down 80% at one point, you know, during this whole thing. But something as volatile and as small in market cap size as Bitcoin compared to, we're going to look at the S&P 500 and so forth later on here. But comparatively, Bitcoin is holding up pretty well, to be honest with you, in my opinion. But
it is quite remarkable how well Bitcoin is holding up compared to some other assets.
yeah, and that's the whole. No, it's not the whole thesis, but the point of Bitcoin, or one point of it, is the store of value aspect, right? And it goes down 75%. It's not really storing your value in the short term, but in the long term, for sure. Looking back, Bitcoin has, been, I think, the greatest asset to ever invest in, if you were early enough, right? In percentage gains, so to speak.
Yeah, what I said that's. I think there's probably other assets, mainly other cryptos, other things that have gone up in higher percentage, but none that have made such a large and sustainable market cap.
Yeah, no, yeah, for sure. But yes, so my thesis is basically, I'm waiting for this line to be cracked. And if we go from here, just quickly, if it just goes sideways from here, we're looking at 17, 18 weeks, maybe even 20 weeks.
That'll take us to April. That would be nice.
Yeah. And so something I did as well here before, I'm actually going to zoom into the daily, just because you see that I have another line here. I kind of dragged this one. It's still valid, this one, and you're seeing it actually. If we're zooming in even more here on the daily, you can see how today it tried cracking through it, but it didn't hold. Maybe it will continue going. I'm looking at kind of a bull flag here, I guess.
Yeah,
but it's such a small one compared to like where we're at right now in the big picture. It's not.
it's very well defined though, which is nice.
Yes.
It's
Yes.
there's not many big huge wicks. Okay, we've had a rejection today, but overall we're still well within the range.
Yeah.
And so until there's some sort of breakdown,
Yeah,
then
and then
we should be okay.
You still have to remember though that as soon as we crack through this, I'm just gonna grab it and move it up here, and then we have two
The next
lines
one to
that are kind of getting shoved in together there, and so that one is probably going to be more difficult. But for now, I'm going to leave it here and see what it does. because it looks to me like it might just keep going sideways. If we're looking at what's happened here, it's been very much sideways. We have a big dip and we have sideways. And for me, I've just been accumulating. Basically, I get a big dump. I try to start accumulating for a while, and that's just me. I know a few others that do that as well, and I know others that are just holding stable coins right now and just waiting. I know one guy has been holding stable coins since like up here and just waiting. And then we got superheroes like you that do strategies that work even better.
Well, yeah, in an ideal world. Depends when you turn them on.
Yeah, for sure. But
if you turn them all on during a bear market, no, you end up still losing. No, I think that the thing to spot though is just how consistently the behavior of the chart is. That whenever you always get a drop, you then get a retest, you then get a higher high, and then you get another drop. And we've had that. We had that in what? Yeah, February, March. We had that in May. We had it in August, and we've had it in November.
Yeah.
That in its own way, the chart is just repeating the same process over and over again until essentially the sellers run out, and until the sellers are not going to be done until all of these bad actors, all of these lenders, all of this leverage is flushed out of the system, because that's what's led to us taking a leg down each time. I don't think Bitcoin had to drop to where it went, to where it did. I think it's very, very clearly just the irresponsibility in the market causing a blow up and an unwind that's taken us way below our fundamental valuation.
Yeah.
However, regardless of what our fundamental valuation is, several 100,000 Bitcoin being dumped on the market takes time to reabsorb, and that's all we're seeing the reabsorption. It just so happened the reabsorption was followed by another blow up, and I think what's kind of interesting here is that you're on the log charts, so each candle represents the same percentage change. The FTX blow up, this was huge, even compared to say that to the Luna blow up, because although the Luna blow up was massive in terms of market cap, it was just one asset that blew up.
Yeah.
FTX was a whole exchange.
When was the Luna?
It was
June, right?
Yeah, it was into June. So you had Luna. Luna was the earlier one. This was the 3AC blow up.
This one, right?
The Luna one happened to drop before in March.
So I'm actually gonna pull just a quick all the way down just to see the difference in percentage drop.
Yeah. So that was 3 Arrows Capital, which was an effect, a knock-on effect of Luna, and then here you've got FTX.
Here's Luna, right? I remember.
Yeah. So Luna was Luna. Well, you have the whole of April really. So as I remember, they basically started to
let's make it from
overextend.
I'm gonna pull it from the top all the way down. So basically, what we've seen here, the severity of the, I think the 3 hours one is the one that hurt the most for me, because you're looking at this 44% drop, right? And you got the exact same drop basically, but this one was so much faster. Boom. That's when confidence, you see this bear market starting to form, and you're looking at this rally, and then you get the disappointment of just, right? And then it starts moving sideways, and you're like, oh, maybe it will survive, and then you get the second one, and that's like, oh, okay.
But at the same time, though, in April, the market, the overall macro sentiment, which obviously we're going to move into, was very, very clearly saying, everything's pointing down, guys. There wasn't much back in April. So, oil spiking, wheat spiking, everything going nuts.
Yeah.
The invasion taking full hold and spooking a lot of people and spooking the markets, understandably so. It wasn't, 48,000 Bitcoin, I think it hit, or 46,000 wasn't likely to hold up. It just simply wasn't. You know,
Yeah, and I think
if Elon Musk could kick off a drop to 30K in the middle of a bull market last year, then what's a genuine blow up of the market going to do? And we're seeing that happen, and it just so happens it happens sequentially, one after another.
I think the craziest thing about this bear market is that we've had so many. Well, I wouldn't call the craziest part, but we've literally had. So I'm kind of marking these as black swan events or gray swan at least, where it's something very unexpected just happens and boom. This FTX one, I think most people were not ready for it whatsoever.
No.
Thankfully, I don't think neither
in
of us had.
Hindsight, there were warning signs for sure.
Yeah.
I had money on FTX up until about maybe a month ago. So
You just dodged it then.
I didn't withdraw through any. Yeah, I didn't withdraw through any warnings. I obviously saw the warning signs and would have withdrawn, hopefully in time. But everybody thinks they could withdraw in time, and a lot of people didn't.
Yeah.
So just complete luck. I happen to have not a penny.
Yeah, a lot of people got hurt, but at least the upside of the whole FTX thing is that when we had these other drops, it was just Luna was a wake up call, and then we had the 3 hours thing, which kind of surprised a lot of people. But
that was off the back of Luna, wasn't it? Really, that was
for sure. Yeah, for sure. So
and that very much was.
But what I'm trying to say is we have the FTX thing was and still is like ongoing. We haven't seen what's to tell us that we saw this drop here and sideways, but if we have more leg downs, we're going to end up down here somewhere, possibly. So I think nothing that we say here, by the way, is financial advice. I hope everybody understands that. But
it's just two guys staring at some lines on a screen and going,
"It's just two nerds."
Oh dear, this doesn't look right.
Yeah, no. So what I'm saying here is I'm personally expecting a range, right? My range, I said, is somewhere between the 0.382 and the 0.65 Fibonacci levels, which is all the way down here to basically 12. It's 12.8. And that's just the range I'm kind of expecting for the next year, to be honest. Like I think a lot of people lately have been talking about 2023 being an uptrend, and I'm just being extremely careful. Yes, I am accumulating a little bit here and there, just Bitcoin for me. From now on, it's just Bitcoin. From over here, it's just Bitcoin.
They all say from now on it's just Bitcoin.
Yeah.
And then alt season starts and the shitcoinery commences again.
Yeah, but I'm personally waiting for that confirmation to get through this line before I start looking at any. And at that point, I'm just looking at some of the big names like ETH, Solana, Matic. And that's it.
It's almost a guarantee. We know how the cycle rolls around. Bitcoin, it will be the first mover in terms of market sentiment, because I think even sentiment-wise, altcoins are hit a hell of a lot more than Bitcoin. The value proposition for Bitcoin is still incredibly strong. Altcoins on the back of everything that's gone on, not so good. Even Ethereum is not as steady right now, sentiment-wise.
It is what it is, and I feel like if we're just trying to be safe and secure with all this, we should be just fine. It's people usually say the people that survive the bear markets are the people that are gonna come out on top, and that's just true for the most part. Either way, I think we should move on to the next part, because I think we wanted to. You wanted to talk about the ETH versus BTC.
Yeah, go for it.
I think I have it right here.
So
there you go. You want the weekly?
Yeah, give me some weekly. Give me a big zoom out.
A big zoom out. All right.
A big zoom out, all the way out. Come on, give me weekly.
It is weekly.
That's daily.
No, it's weekly.
So
linear. You wanted linear.
Yeah, it's fine. Yeah. either way, like the thing that stands out most overall is that ETH is no doubt in what is now a 3-year uptrend versus Bitcoin, and the drop the drop that we saw in well a few weeks ago from FTX was kind of barely a blip. You didn't see anywhere near that same collapse as we saw back in June following the 3AC and Celsius blow up, and so there is still some sign of strength in the altcoin market, because I see the way to look at Ethereum is as a proxy for the entire altcoin space. So if ETH's doing well, altcoins are going to do well, and this to me does show a certain amount of confidence in the market on a long-term basis. Because bear in mind, this is that section that you've got marked there is most of a 2-year period.
Oh yeah.
So absolutely, things could go terribly, and this is versus Bitcoin. So if Bitcoin drops, ETH drops, yeah. But in terms of where the direction is headed, the direction is still on a long-term perspective is up. If what is considered to be the safest crypto is being outperformed by Ethereum, by a competitor, then it's a clear sign of confidence for the market.
Yeah, and I'm just looking at this, like just a quick overall trend line since back in December 2020, and it's an uptrend, yeah, and this range is something that a lot of people have been talking about. It's actually, they usually pull it to here, I think 0.8, something like that, which is the overall topping range for ETH. And I think when it goes to like 0.1, that's going to be a big event. But you're right, like it is an uptrend against Bitcoin. I mean, I don't really dabble much in ETH, you know that. I like other L1s, but we're not going to go into that now. But I mean, even as a range to trade in, this is a pretty solid, swing trade range. So
yeah, it's just I see. I think if anything, the line that you had drawn there that you just deleted is probably, to me, the sign of any sort of final altcoin capitulation would be the loss of that diagonal.
Yeah.
And so that would be the final flush, because the altcoin liquidity simply wouldn't be able to hold up against the bigger market of Bitcoin. But what's interesting to see, though, is that because all of these blowups have been through centralized entities, and the majority of the actual real money that these guys have held on their balance sheet is most likely was Bitcoin. And so, whereas the big difference compared to 2018, 2019 was that back then we saw Bitcoin really, really consolidate the market, and all that valuation got sucked out of altcoins and into Bitcoin. Now we're not seeing that. We're seeing that people are much more, they're heading into dollars. They're not heading into Bitcoin. Bitcoin is being sold quite heavily during these liquidations.
Yep.
And we can see that through the fact that I was looking at Bitcoin, altcoin to Bitcoin charts during these collapses, like back in June, and they're all green. They were all up, and that was one of the most bizarre things I'd noticed about the drop. And that said, like, this is someone being margin called on solely Bitcoin. They don't have any alts to sell. They have Bitcoin to sell, and they're getting out. So that process is over. You're then going to see a lot of people start to reallocate, and the thing with everybody talking about we'll talk about money printing of 2021 and the chickens coming home to roost in terms of where the price drops down to. A lot of those dollars are still floating around. There's a lot of people that haven't allocated and will allocate a lot of money into something. And when you think, what are they going to buy into? Of course, there's going to be some people that will allocate to altcoins, but the safest play will always be Bitcoin. And from a crypto perspective, anyway, that's where they're going to allocate first.
Yeah. Well, yeah, basically, I did this just quick line here at the bottom of the range, right? So, like you said, if there's a sell-off and we crack this line, there's going to be some support here to kind of move on. But that's ETH versus Bitcoin, right? So it's I kind of feel like, yeah, it's an important chart, but you know,
I think that this chart shows to me how it reacts to kind of that yellow line and this range is very important. I think if it breaks down below that diagonal, for starters, it's going to come and visit down to the bottom of the range. And if Bitcoin begins to start moving on its own, as it has done, as it did in the previous bear market, then that would be a very, very big warning sign for the altcoins that even if the altcoins go up, that the market does not want to be in those coins. The market wants to be in Bitcoin. And the ETH BTC is the one chart to watch that says, yeah, maybe we shouldn't be in the riskier assets.
Yeah, no, I can see that definitely. So, you know what? Let's actually move on because I know we wanted to talk about the Dixie as well because it has a lot to say in my opinion. This is the weekly. Obviously we're seeing, and I'm gonna jump between the S&P 500 and the Dixie as well. We've seen this. Everybody was waiting for this. The talk on the streets was the parabola, and I've never been a big fan of it, and neither have you, as far as I remember our talks from before. But essentially, it's cracked through that now and pretty heavily, and it's been a few weeks now on the downtrend, and now it's kind of showing some kind of bounce, some kind of strength again. But I'm just going to jump quickly over to the S&P 500 here, and I'm actually going to remove this Bollinger Band. Sorry, the Fibonacci. At the same time as that's happening, we're looking at this on the S&P 500. We're hitting that trend line again. I'm going to go to the log, actually. There we go.
Yeah.
And it kind of, I can see these are extremely correlated, but like reversed on each other, right?
Yeah.
It's something that I wanted to say too is like, okay, the Dixie, it has topped out here, and now it's bounced. And the S&P is doing the same thing, and I think Nasdaq is doing the same thing too, kind of, not as structured as the S&P, but I do believe that the S&P gives a better story overall on the macro perspective in terms of what we care about with crypto and all that.
Yeah.
So my conclusion from this, it's still in the structure that it's supposed to be in, or that we're expecting it to be in, right?
It's a bear market. It's a downtrend. It's a bear market, and it's going to stay that way until it tells us otherwise. And right now, no, it's not telling us otherwise. And so when you have that, a very clear resistance level on stocks, coupled with a very oversold conditions on the dollar, and the dollar has been the main driver of stocks breaking down, then it's not a time to get bullish. It's just not a period technically that you want to get excited. You want to really look for a proper confirmed reversal. And more to the point, the dollar is very fundamentally driven right now, and those fundamentals haven't gone anywhere. The reasons that people want to be in safe havens like the dollar still exist, and so at the very, very least, you can expect a retest of these highs for the dollar.
Yeah.
Just logically, for every you have even if this is a blow off top and this is the highest that the dollar goes for the next decade, which if that was the case would be fundamentally driven because they would be turning the money printing taps on. But in the absence of a big, huge fundamental event like, oh yeah, we're putting interest rates back to zero, then yeah, the dollar is almost certainly going to rally up and try and take these highs out. Whether or not it fails, we will find out. But there's
so what
for
I'm
now,
doing,
yeah. This.
So what I'm just doing here, I mean, I agree with you. So what I'm doing right here now is I know, I think it was Kevin Svensson who was talking about this before, where you have these big rallies during bear markets, for example, and here's 2014, right? Dollar goes up. Basically, bear markets commence, at least on BTC. Where's the BLX? 2014, right? Here, straight down, right? Where was I, Dixie? So when you go into this sideways shopping, it's still up and down with quite the big moves, right? This is not small moves right here.
So only a few tens of thousands of percent.
Yeah, exactly. So if you scroll up here and you start looking at when we saw this starting to move, and basically here in November is where we had the top of the bull market, and it just kept going because people were selling their assets into the dollar. The dollar was getting strength against everything else, and me being Swedish, I look at this, Swedish crown against the dollar, and it's just the saddest chart you will ever see in your life. But yeah, so this is, seeing this happen. If we go into some kind of sideways move, eventually we'll kind of find that the market will start coming back again, because we have some big moments coming, right? We have,
but ultimately, all the Swedish currency chart is just an inverse of the dollar.
Yes, for sure. It's just what it is.
It's just the dollar inverted. Like it's not so much that we're seeing a bounce of assets. We're just seeing a cool down of the dollar. And I realize they look like the same thing, but one of those things is driving the market, and we're just on the end of this mad ride, and we're just kind of clinging on until it decides to land.
Yeah. Honestly, personally, my personal opinion is that if we see some sideways chop here, and we have the Fed pivot, for example, in the future here, hopefully soon, maybe not a pivot, but they were talking about cooling down the rate hikes, for example, right? Maybe this month.
Yeah.
Some people are saying we're going to see a 50 basis point rate hike instead of a 75, which is going to be fairly bullish, at least a little bit for the markets, I think.
I feel like it's going to be.
It's not going to be much of a turning point until they actually pivot properly and start lowering the rates. And I think that's where we're going to start seeing some moves.
And that's so history says that the bottom is not in while rates are going up. The bottom isn't even in when rates are being held. The bottom is in when they start to lower rates in response, like when
something breaks,
the shit hits the fan, when everything starts to collapse, something breaks, the market goes into free fall, and they have to rapidly reverse course and move back to very low interest rates. That is when the bottom moves is in. And right now we're still in a hiking cycle. This hiking cycle, even if they move 50 basis points this month, so 0.5% higher, and people go, yay, look, they're starting to pivot, they're starting to cool down. Like the fundamental market effects of that 50 basis point rise won't be seen for 6 to 9 months. So they're still rising. They're still making an already increasingly difficult market even more difficult, and they're doing it on purpose. So no, there's no savior coming. There might be a short-term bounce through speculation and going, okay, right now, yeah, they've pivoted, they're doing this. People are going to think the market's going to go up, therefore the market's going to go up. And if people think the market's going to go up, then the market has a habit of doing what people think short term, because everybody will buy at once for the same misplaced fundamental reasons.
Yep. Yep.
But it doesn't stop the problems that are being caused by the action.
Yeah. No, it's true. It's true. I I think the whole market is kind of tired. I think sellers are starting to get exhausted. And
sellers,
I'm not sure about 2023. We just have to see. My opinion is that we're just going to see a sideways move for a long time before something big actually happens. And I'm just taking it really easy.
I think the thing to think is that it's very rare that there are forced buyers. You have, as we're seeing, the reason for these drops down, these massive collapses, is that there have been forced sellers. There are people who have been forced out of their positions. Now, although you do see that on the reverse when you see a short squeeze, when too many people are overly bearish in the market, and that provides an opportunity to push them out of their positions, but you don't see that en masse. People generally don't go bankrupt from a short position. It has happened, but on the whole, it's people being too exposed to the long side. They own too much and they have to get rid of it because they got bills to pay that they can't afford to pay. And if we're looking at the scenario and you think that there aren't people right now who are distressed, that have too much debt, that have too many obligations, eventually the only asset that they'll have to sell, if that asset drops at low in price enough, they will be forced to sell it. They will have no choice but to sell to meet their liquidation, to meet their margin call, or they get liquidated.
Yeah.
And you cannot price those forced sellers in.
No.
And so while we have this, while we have this market, we don't know if there's anyone next to fall. As we've said, if there's someone else to fall,
we're gonna have to wait and see.
Boom, we go.
There are names out there that are in the danger zone, so to speak.
Genesis being the main one.
Yeah.
Gemini $900 million?
Yeah.
Do they have it?
Probably not.
Can they get it? If not,
Hopefully.
then let's see how much, then, so you think there, well, the Winklevoss twins who own Gemini, they have $900 million. I imagine they don't have it in cash. They have $9 million of value.
Yeah.
So if they are forced to sell a large quantity of Bitcoin and other assets, real estate, whatever, in order to meet $900 million of obligation, if Gemini starts to have a bank run, well, then what's going to happen to Bitcoin? They might have to sell $2 billion worth of Bitcoin to get $900 million of collateral.
Yeah, no, it's
in order to meet those obligations.
There's a lot of threats that is looking us in the eyes right now. So I'm just taking it easy. I'm waiting.
Yeah,
I'm just waiting. And I'd rather buy a bounce up and miss out on 30% in the bottom than to. But that's me.
That's it. Of course, again, this goes without saying, not financial advice, but that's why the time and tested method of averaging in and just if you treated something like Bitcoin as a long-term volatile savings account where you buy it and then you don't care whether it goes up or down, and you simply hold on to what you have, and the next month you buy it again, whether or not it's cheaper or more expensive.
Yeah.
And by following that kind of strategy, either it keeps going down and down and down forever, in which case, well, you made a bad choice, or eventually it bounces. And if you've been buying every single low all the way, then those bounces add up to a lot of profit very quickly, quite often.
Yeah, cost basis goes down. It's yeah, for sure.
It's a reliable method for a reason. The entire pension system is built on it. Oh, let's hope that doesn't blow up. 'Cause, yeah.
Oh, okay, let's end it with this. We did have another chart with the Dow Jones and everything, but we think we can skip that for now because we were thinking we would do this for half an hour, but we just never stop talking, do we?
No, we don't.
We can do that
So
tomorrow. We're gonna try to do some on-chain tomorrow, I think we said.
yeah, cool.
Look at some on-chain, get some good perspectives there, and see where we are. Oh, Domino says no. Hi, Domino, by the way. It's good to see you and see Davis in there too. All right, cool. If you guys have any questions, feel free to ask as much as you like. But I kind of feel like we should end it here so we don't over. Oh, and Splotchy is here too, of course. Yeah. So I think.
Hi guys.
Hi. I think it's time to end it
Hey.
here, and we'll see what we can do for tomorrow. Tomorrow, hopefully, everything will work. And
Hope so.
and I think tomorrow as well, we should try to keep it a bit shorter because going too deep might be dangerous. But hey, we're still learning. So
Yeah.
yes. All right. With that, everybody, thanks for tuning in, and we'll see you tomorrow, hopefully. All right.
Thank you guys.